What is going on, everybody? It is your boy Ray Vici here. So we're gonna just be going over general marking out of supply and demand zones on the charts, right? Now, this is a very general video. We still haven't gone into in-depth details on supply and demand. What is a flip? What is an extreme, et cetera, et cetera? What are some of the confluence criteria that we look for? What are refinements? How do you look for refinements? Getting down lower time frames, refining down from a higher time frame to a lower time frame, et cetera, et cetera. So that's stuff that we're gonna keep putting through this whole course section. And at the end of everything, we're gonna actually go through and I'm gonna actually practice showing you not just the whole process of marking out POIs, but how we refine them with all the concepts put together. So for the time being, I'm just gonna start marking out POIs. Calling them as they are, and some stuff may not make 100% sense to you, but understand that as they come along in the videos, later on in the course. They're going to kind of come together for you to be able to kind of get that understanding, right? So, as you guys can see, there's certain areas over here, right? So, first thing we're going to be looking for in a supply or a demand is going to be for some kind of break of structure, followed by opposing side expansion, pivot, or some kind of refinement within the area, right? Or some kind of range or some kind of area that's ranging that ends up breaking through eventually. That causes a break of structure. That's going to be the base foundation of everything. So that's all we're going to look for in this video. Nothing else, nothing more. Okay. So we're going to start from here and we're going to go on the daily because the daily is super simple, super clean. I'm going to go through a little bit of pressure, nothing too crazy, nothing too much, um, just to kind of get your guys' hands wet, right? In this case here, we have a most recent break to the upside over here, depending on how strict you want to be with criteria. This technically was a pivot up. I personally wouldn't call this an actual structural level, but I would use it as an indication to see that a level of technically demand, this inside bar over here, that's also another find we're going to learn later on, is the inside bar. Inside bars start to fail, and I'll use this as an early indication of shift that price may want to still come down. Now, would I necessarily be looking at this overall area? I'd probably treat this whole leg as one break of structure because the next structural point to the upside is going to be over here. And in regards to reference of that, this would just be a sweep on liquidity and continuation, especially if we're thinking higher time frame narratives, seeing how this whole point price has been so bearish coming down, right? As you guys learn in the structure videos. So in regards, let me just clear my drawings quick. In regards to that, what happens is this technically could be your first flip over here, right? Because this now you can see in regards to flip and extremes, which we'll go through in more details in other videos, ended up breaking through over here, ended up breaking through and then pushing through and actually leaving an inside bar level of demand. This failed instantly, is reacting to the extreme demand over here. And then you have this reaction up. This is actually a flip within itself that ends up actually breaking structure, significant level of structure on the daily. And obviously, there's going to be in the conference videos on how we're going to understand the strength of a supply level or demand level, stacking conferences, et cetera, and equivalent areas of what it does take out and what it doesn't take out. In coordination with time frames. So obviously this would be a significant amount of a very strong supply level because it ended up taking a daily low that ended up actually sweeping the liquidity and breaking above and then ended up breaking down below. So this would be a very strong level of supply to trade from. Just erase this quick. So we have a level of supply here, like so, right? As you guys can see, price was within this expansive range over here. And a lot of the times we're going to be refining our POIs to levels of inducement. There's also times we refine to levels of imbalance and we pull down accordingly, depending on how things kind of play out. This is the daily, so we are going to be looking for shifts of structure on the lower time frames, 4 hour, 1 hour, 15, 5, et cetera, and going down in layers to try to confirm certain POIs and get very tight entries. So, I mean, regardless, it's not really so important. At this stage, you're just looking for a point entry where price is going to react when you want to develop a certain way, right? But as you can see, price ends up coming down within here, and this last expansion, being this overall expansive range, actually came down, reacted, and then you have this little area over here start to show you some kind of refinement within you now. I personally wouldn't actually refine just to this one candle, especially not on this time frame because these are massive POIs, right? Like if I just look at this area from here to here, you're talking about 100 pips, right? Like price is going to necessarily want to come and tap into these areas. So I would personally have my refinement from the first or the last expansion that reacted to the low that caused the last pivot up that actually ended up breaking structure, which at the end of the day, you see here, you're reacting to the low, spans up. This actually breaks through, falls through on the breakthrough. And this would just be a refinement within this overall POI. This is just to show you guys an example, just taps into and then goes, right? So now, take into consideration, we haven't gone through refinement videos at this point, so this is just kind of something to open up your guys' mind to a perspective. But I want you guys to keep an open mind and just remember these topics that will make more sense later on down the road as I start to introduce other concepts and theories in the overall curriculum, right? So looking down on this area now over here, and now we have another break of structure over here across the board. We have a break of structure and expansion down and mitigation of this overall POI and refinement. And then we have a breaking structure, this being our most recent range. This is barely falling through, just wicking below. This would be more of a sweep. So we'd be looking at this overall leg as one leg. And then now looking at this overall expansion, like this most recent large expansion to the upside, um, that ended up starting to put down and ended up causing a break of structure from the beginning. This could technically now be a level of refinement for this overall POI over here. You have your last expansion here that actually was within this overall range anyways and actually ended up causing the break of structure. Coming back down this area over here, we're now looking at this level of supply, last expansive range over here again. Bada boom, bada bang, last expansive range. As you guys can see though, there is some inside bar refinements. Last pivot that ended up causing the break of structure. This is where that came from. So these are what I mean by refinements do come in place. And you can see they occur pretty often, especially on higher time frames, right? Especially on higher time frame. As you go down, you have to be a little more picky with your POI selection because you're going to be getting to entry level. But you guys get the general consensus, right? So once you start to have a shift of structure, like you guys have to understand, this is still a very large, expansive structure, right? Like this is a one swing leg over here for this daily over here. You have this daily sub, right? And this ends up being from top to bottom, 658 pips. These are multiple massive days. As you guys learn in the structure video, technically this would be a failure of supply over here when this starts to break up, but it's still a flip. In order for us to really have indication that something's going to happen on this time frame, we need to see this high get taken first, right? And realistically, that doesn't happen. But at the end of the day, we don't need that to happen because what we're doing is we're trading intraday, right? So when price starts to make a new low, we're probably trading down here. At some point along the way, depending on our sessions, we might trade up into these POIs, getting some kind of reaction. Depending when it lands on our session, we may trade out of here and hedge positions back down further, trying to take price out. Probably closing positions partial the way through, or literally taking partials and holding positions into lower pricing and then see how price reacts. When price starts to do kind of this, even though this is, let's say, an IOS. So this is an an IOF. This is internal order flow shift or IOS, sorry. Um, iOS. So this would show me some kind of indication that look, now I'm having levels of internal demand because on the daily this might not be level demand. This is an inset bar, but on the day this might have not have broken something significant yet. But when you start to go down the lower time frame and we start to refine lower time frames, and we're not trading off the daily, now you go on a 4 hour and you can see that certain things kind of line up to allow you to start trading these positions. You're seeing levels of demand being respected, bits of structure being respect or broken over here internally. And now you see your first level of actual supply, regardless if it's a flip or not. This is a level of opposed side supply that has now failed, and you're now having to break a structure, respect demand. And now, in my opinion, buyers are in control unless something happens in this area over here on some kind of lower time frame, which doesn't end up actually happening. You get a little fake out over here, and then you push right through, start breaking above. At this point, price pretty much ends up switching to yeah, or sorry, to a bullish narrative because you've just taken out this most recent high. Um, so let's look at it from this perspective. Now you're tapping into this extreme. This would be my first area over here. This is the inside bar refinement. Now I'm not gonna get into refining the levels of liquidity or anything like that. We're gonna leave it at this right now as it is. Just simple, clean. You guys can get an idea. We'll go through inside bar refinements later on as well and know why we did that. This is a flip over here that ended up reacting to this level of supply. We'll get into that as well in a second. And then ended up sweeping below. That comes in a later area. So price continues to come above. This ends up being a flip over here, breaks through this bit of structure over here and takes out the most recent high. Price doesn't actually come back to mitigate this. This is going to be unmitigated. Sorry, guys. What's up? Whew. Anyway, so now you come to this over here. Price breaks above, starts to come in. This is a very large expansive range. As you see, very clean. So we're going to automatically be taking the last level of inducement, right? Last expansive push, to be honest, from the pivot up, pivot down. I would honestly use this overall refinement because it's an inside bar. But you could use this larger candle. This would be your last expensive push, from honest opinion. And if this engulfed other candle, maybe you could have found some kind of refinement within your. Just depends how you look at it. But now you're having bullish breaks and structures. Buyers are in control, and levels of demand are being respected. I'm not going to mark all these ones because it's going to take me a minute in time. You guys can see the lines, though, just for a better understanding. Um, Breaks above over here. You're now tapping into. What are we tapping into? This level of demand, right? Over here like so. It's a very large level of demand, so I'm not necessarily saying this would have been tradable or not. What we probably would have been able to do is get this to come down in and then watch this area. Probably expect this to come a little bit lower, to be honest, maybe sweep beneath over here and tap into something here. So I'd probably have this refined, especially after such a large sweep, right? I'd probably have this refined to this last candle over here. Erase this lines quick because you see how this one engulfed the previous one. And yeah, that'll be my most recent one. Doesn't actually tap in, that's fine because we're watching price to monitor. And as price shifts up, we can just take continuation trades, riding momentum higher, right? As you guys can see, next break of structure over here, right? This one starts to fail to put in new structure levels, starts to create inducement internally over here. We haven't covered that yet. At the end of the day, inducement got swept, reacted, and at this point, this flip POI over here was used because this already got partly mitigated in the whole situation when it started to make inducement, got mitigated, and now was used as inducement for the extreme. So this flip POI now got used as inducement for extreme refinement underneath this level of thing, and we'll learn that in the liquidity concept as well later on. So coming back into here now, break of structure, etc., etc. You guys kind of get the point here, right? So we've had continuous breaks of structure, as you guys can see. Price breaks down over here. This is the extreme. You have had a break of structure. This technically did come down and just mitigated, just barely mitigated this one, leaving this unmitigated. Just tapped into your tapped and just went right. You got to look at, hey, what ended up actually happening? Did this end up breaking? So this ended up breaking this point of structure over here. This was some kind of pivot. You can see probably a lower time frame, be some kind of refinement over there that actually ended up causing the break of this overall structure level. So this was some kind of reaction continuation to the upside. As you guys can see, break a structure, came back down, mitigated again, pushed up again. Price started to break down. Now we'd be monitoring price, saying, okay, maybe price wants to come for a deeper mitigation. We have levels of inducement across the border here, yada, 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 right, within this overall swing leg. And where is my last expansion area? Well, my last expansion area is going to be over here, right? And then, like I said, we're going to get this is the last expansion down over here, pushing down, levels of inducement over here. But I would probably end up refining to this area over here, my inside bar and my last bearish push down. This would be my area of interest. We'll get into why that refinement is valid and how we'd get to there and et cetera, in a minute. Let me just erase these lines again. Oops. Like so. So anyways, okay, I'll get that later. Um, Yeah, so as you guys can see though, at the end of the day, doesn't necessarily mean that at the end of the day, levels of demand started failing over here and temporarily sellers are in control, but it doesn't necessarily mean that it's going to actually be respected long term because at the end of the day, we have bullish structure right here. We're expecting price to kind of do its thing. The larger overall swing line of things, we're not going to get into the stuff now. On intraday perspective, it doesn't really matter. But just for you guys to have an idea of where price will kind of go and where it wants to go in the immediate future, right? So as you can see over here, price starts to do its thing, come this over here. It now ends up coming and sweeping above on the lower time frame. I guarantee you could find some kind of refinement here. I'd be trying to take a wick or something above this here, but I'd be waiting for this area to kind of see how price develops. Price went down, broke, and didn't really have a solid follow through though. So that's my only thing, right? If you see this, it was just wicking through, didn't have a follow through, nothing really solid that I would call um, as a strong follow through for a break of structure yet. You can use this on a lower time frame, and if you find a refinement here and you look for some kind of confirmation or shift, we'd be trading this area, right? So first thing I'd probably end up looking would be for this, depending on the lower time frame, how things kind of go off or things get swept. Once the sweep happens and price starts to break down, we can look for some kind of reversal. The number one thing is also in POIs, and we're going to get into this later on. You got to see how price action develops back into POI to validate it. This is why we're going to go through that in the confluence area, and it's going to be mixed with the liquidity area as well. And we'll talk about that more later on, right? So coming back down to this area over here, price breaks below over here, comes back down, mitigates this overall area, probably some kind of lower time frame refinement, breaks down below over here, comes down and respects the extreme over here, like so, depending on how you want to have it. Technically, this is the low, this is the high. Now, being this the situation, I would probably refine this, and on the lower time frame, I guarantee this would be liquidity. I'm looking at this as well as my last pivot up, comes down, push it down, pivot up, push it down, pivot up, push it down. Okay, so automatically I'd be looking at this area as my level of inducement. I'd have my stuff refined here to the extreme. No levels of, or no flip or nothing within here. Maybe on the lower time frame you can find a flip here, but nothing that I'm seeing really strong that's planning to hold, at least on this time frame, right? When we shift through time frames, things change. Things look a little bit different. You can find refinements, and depending on how price develops into the POIs, we can maybe take them, right? Um, Price comes in, just sweeps below, boom, sweeps below, starts to break down like this. Over here, you have a shift again. So now you're like, okay, you know what? I'm in the extreme of the extreme over here. I've had a full mitigation on this overall POI. Now I might be looking for some kind of pushback to the outside, right? Maybe continuation on higher time from bias. So when price starts to break above, remember I said depending on price develops, this is a very, 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 very aggressive push up. Like this just exploded up and took out a lot of those liquidity. And the way price came back down, if I'm not mistaken, this is actually news. This is a few months ago, but I think I was involved in some trades over here. This was news, if I'm not mistaken, just a one massive spike down. Ended up sweeping liquidity, um, and continuing to push down further deep into price. And there was no levels of inducement within this overall leg when you go on the lower time frames and on the medium time frame, you can see there's no levels of inducement. So automatically what's going to happen is you're going to learn the liquidity concept. This is going to come and sweep the low, right? So back onto the POI selection. Technically, this should be the area POI. That's way too massive. I'm looking at something equivalent. Probably this area would be my first area if I really wanted to get involved and have this POI leveled out. But then I would look at the most recent engulfing candle because did this engulf did this did engulf this one, and there's a lot of imbalance right before. As you can see, levels of imbalance, empty area where price want to come mitigate to it and fill. And there's all efficient price action over here. So breaks above again. As you guys can see, it doesn't actually come back to mitigate the overall extreme refinement, but it does come back to mitigate the overall expansion, this overall leg, right? This is kind of where those refinements come in. And you can possibly find this non-mitigated. As you guys can see, this comes and reacts perfectly to the unmitigated PY later on a higher time frame basis. As Let me just erase this quick. As you guys can see, you could probably find, I'm guaranteeing you there's some kind of flip refinement here. As you can see, it came, reacted to this overall supply level over here, right? Reacted to the overall supply level. This is the last pivot over here. And on lower time frame guarantee, you can find some kind of refinement and price comes in, reacts right here, and then starts to go back on its way. This is just stuff through experience you see in price action. You learn to read candles and how it interacts with structure level, and it'll come with time. That sometimes you don't need to go on lower time frame. You mark it on this time frame just by seeing this. You go down, and there's like an inside bar, some kind of refinement. Will be covered in the refinement section as well. Breaking above over here, coming down to here. This was actually the flip that ended up causing this break of structure. Price came down and swept below and actually tapped into the extreme. So this is actually a really nice flip to trade from because you've already mitigated the extreme, and you have this overall scenario over here kind of playing out, right? So obviously, I would have probably refined this. I need some levels of inducement. I would have looked at this pivot as inducement, to be honest with you. That would have been my refinement. Even though this is technically the first expansion, I would have probably had it underneath this candle pivot over here. Probably something you could look on the lower time frames. Um, Expansion down, but then you have a pivot up, and this is my last bearish expansion. I would be probably looking something like this as my overall refinement, right? The full demand level would technically be this whole last expansion, but it's very massive. And most time you don't have to, you use that for reference. Like I said, we'll go through it in the refinement videos. Barely breaks above, wicks above, right? So, I mean, it doesn't necessarily invalidate this, but then I'd be curious to see how price really does its thing because now I've had this level of, if this came in here, started to do its thing, and possibly there probably is some trades in here you could take up, and then probably taking partial. This are daily candles, right? You're taking partials like you're starting your position somewhere around here and you're going up 139 pips. Like you can bang out five to whatever R position, 5, 6, 7, 8, 9 R position, and literally anywhere from like depending on how small your stop loss is, from like 20 to 40 pips, right? So there's definitely position to take into here. It doesn't necessarily mean that's invalidated, and we'll just take our partials or close our positions fully and then hedge accordingly, right? That's just the name of the game. So, for the time being, what this happened is this reacted to this overall supply level here inside bar. But then obviously, where's my level of inducement? Well, this came up in here and this actually flipped and broke this area here. So this is actually my flip. This is my first level of inducement. Probably some kind of lower time frame refinements in here. We're not going to get into it now. You get an idea. Once this kind of started to fail to take out the next most recent high after reacting to the extreme over here, after breaking this level of structure. Um, you'd be questionable if price started to shift on other time frames coming back down, that this might be possibly weak and you might be expecting some kind of mitigation, especially now that you've had a break on a higher time frame basis of structure, right? So exactly what happens here, as you guys can see, right? Price comes down, just aggressively melts, right? This ends up leaving a flip POI over here, right? Price comes in, mitigates back into this area over here, leaves an unmitigated POI over here. As you guys can see, unmitigated POI comes in, ends up giving you tradable trades right here through this whole area. This is, this is the type of POIs that we can trade from, even though maybe we're expecting price to get taken. The high probability trade areas to get some kind of reactions, right? So, long story short, things are going like this, breaking down below, coming back up, reacts to something within here, probably the lower time frame, doesn't actually tap into the extreme. There's probably some kind of level of flip within here, flip refinement, as you can see over here, right? Like so. Because this would technically be some kind of reaction to this over area here. There's probably some kind of refinement on the lower time frame. As you can see, this would be my most recent sweep or my most recent break. And then because the way these candles close down like this is one push, pivot up, push down. This would be a level of supply, and then starts to do its thing here. This is some levels of stack liquidity for this overall POI. As you can see, price comes in, taps into here, just starts to blow down, and then eventually respects levels of demand because it did take out this last supply level. This is a valid level of demand here. It's very, very messy. This is why we shift through time frames. If you go on the 4 hour, if you go on the 1 hour, whatever, you'll be able to see clean structure, mostly on the 4 hour to kind of see these differences in price when it's very, very messy on the daily, for example, right? Uh, Coming back into here, you have a push above, a break, expansion up, continuation up. Like I said, probably some refinements on the lower time frame here. Price starts to kind of shift down. You have some kind of internal structure over here. So obviously we're expecting something to get mitigated. And it does mitigate something. We can probably find some kind of lower time frame refinement reacting to this area over here. Looking like a flip, in my honest opinion. In this case, would be a pivot over here, the most recent pivot within this area over here. Right, but like I said, these are all tradable areas, right? This is the daily candles, and it's something, you're talking about 170, 180 pips by the time it comes down, it actually starts reversing back up. If I'm not mistaken, this is news. I can't quite remember. I think this is news. Explosive came up, started to blow through, and then yeah, we're just repeating the cycle again and again and again and again, right? Obviously, when you guys start to put in the other concepts again, you start to kind of see these things and you start to see this thing kind of play out, sweep above here, break down, continuation, this kind of compressing tight price action, equal highs over here on a 4. This would probably be a nice refinement over here with equal highs comes in, taps. If it's unmitigated, perfect, starts to break down. Again, this is now a flip, whereas just barely taps right in and just starts going, right? This is extreme, starts going. So I mean, it's a repetitive pattern that happens consistently, and it happens in every single time frame. And this is why I use confirmation with other time frames to be able to really break down everything and get down on tighter positions, right? So this is a general video. This one ran a little longer than I wanted to. Sometimes I get a little bit involved because of the other concepts. I try not to mention them throughout the series until you get into more depth with other stuff. But these are things for you to kind of open up your eyes to these situations and these consistent patterns of supply and demand happening. And you can kind of start to see how it's such a consistent thing all the time. And when you start to really put these things together with structure and liquidity and all these other things, and you're hammering it down with the trade plan that we have over here, that's super robotic, super clean, getting you in and out of trades, uh, you know, on a daily basis. Like it's something that just happens so regularly. um, yeah, and so long story short, I don't want to blab on about it because I don't want to turn this into a theory video. This is supposed to be just a general example, and a lot of the stuff I want to talk about is going to come in the later modules that we're going to have to kind of put together and then put this all together so I can start to really go and show you guys how things kind of come and merge together. So that's it for this one. I'll see you guys in the next module. And yeah, guys, have a great day.